Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'm going to take you through the week ahead analysis. We're going to look at the news for the week and some charts of interest. So first of all, let's head over to the news. Now, in the planned news this week, we see some key data from the ECB and the RBA, as well as some inflationary data out of the US. Now, the ECB are expected to leave rates unchanged at 0%. They're looking to manage the risk of the effects of the Ukraine and Russia war at the moment. So they're trying to balance things here. And last week we actually saw the euro fall quite significantly, which we'll talk about a little bit later on in the video. So the ECB may have to try and come up with a way of supporting the euro at the moment. So that's why they've left rates relatively low or unchanged recently. The RBA governor speaking this week. Now, the Australian dollar has been quite positive recently, despite the risk-off sentiment in the market. So the RBA could have some further grounds to suggest that they could hike in the near future again. So you know, the RBA governor speaking could lead to that potential rise in interest rates there. I know they left rates unchanged previously, but as I said, Australian dollars are continuing to perform well, so there could be some interesting news out of that. We then have US CPI figures, so we have some inflationary data. Now, this could put some pressure on the Federal Reserve because the chairman, Jerome Powell, spoke recently about not moving interest rates more than 25 basis points. And investors are a little bit disappointed by that because they're expecting the Fed to act aggressively because the inflation rate is moving so much higher than above that sort of 2% target. I think, you know, the US inflation rate at the moment is significantly high, and you know, a tool that they can use is hiking rates. If they do it more aggressively, they can try and handle the inflation rate a little bit more. But recently he's downplayed that. If, however, inflation continues to rise, it may just start to force the Fed's hand a little bit. So could see some dollar buying off of that news there. Strength meter this week, not necessarily anything too different than what we saw last week. The pound's still relatively weak, heading into a bit of a reversal zone now, but I don't see it reversing anytime soon in the current market conditions. Australian dollar remains positive 6, so one of the strongest currencies at the moment. Also suggesting that the Australian dollar is doing pretty well currently. So moving on to euro US dollar, then the price of euro dollar has plummeted recently due to the ongoing war between Ukraine and Russia. We saw a significant drop last week, and that was largely due to the fact that we had some news about Europe's largest nuclear plant, which is actually based in Ukraine, being bombed and being on fire. And that saw the market move really aggressively overnight. So, you know, will that sentiment continue going into this week? We have seen some headlines already this week suggesting that there have been some more sort of shelling of nuclear reactors in Ukraine and things like that. So, you know, I'm expecting maybe some gaps on the weekend open again. Maybe if we fill those gaps or even come into these supply zones here for euro. So, you know, if we were to see another gap lower, we may see that gap fill and a continuation down, or, you know, looking for these supply zones around about 1.1 for opportunities. Pound US dollar then, so again making new lows here, just like euro was. We had a gap last week, thinking that we could see again the same thing. If we get another gap on the market open, price could fill that gap, continue to the downside. Alternatively, we do have a slight supply zone around about 133.30, and if price was to retest this, form bearish price action, we could see some downside to the market there. Euro yen has recently broken into some new lows on the weekly time frame. We're in this weekly trading range, and we've had a significant bearish close below that zone. We are at a technical area of support, so we may start to see some buying here. I'm not too sure whether we will or not, but I'm again thinking more likely we're going to see more gaps like we did last week. Another gap down, fill of that gap, continuation, or again supply zone around about 127.75 here. The DAX then, so this is the German DAX. This suffered a lot last week, as well as other stock markets did as well. We saw significant gaps being formed in the market before price closed that gap and moved down. If we have a similar effect here on stocks as well, we could see price gap down again, retest, move to the downside, or like every other market, look for those supply zones to be affected. But very similar to Euro Yen here, we're in a trading range. We've broken that significantly. It looks to me like we could be seeing some further downside to the stock markets in the short term, and the DAX is one that could be largely affected because the euro has been largely affected. Okay, so keep an eye on that market as well, but keep an eye on the headline risk as well. It looks like that risk off environment is going to continue. It's heavily impacting the euro and the pound. Dollar and yen have been stronger because of it as well. That could follow through into this week. I hope you enjoyed the video update. If you did, leave it a thumbs up. Subscribe to the YouTube channel to watch some more of our Forex trading content. And I'll speak to you in the next video.